Hello everyone, my name is Nitin Nahar. I welcome you all on behalf of JK Shah classes to this video related to RTP November 2022 CA Final. Now, let me start by saying that there are some errors in this RTP, or I can also say that at some places there is also a difference of opinion. I will point out all these areas while we are discussing the entire RTP. We will take up the MCQ first, thereafter move to the other questions. Now, the first MCQ and the trick which we will use to solve the MCQs is first we will go through the questions as to what is asked, and thereafter we will come back and read the entire case study based MCQ. Let's have a look. Now, we need to study the case scenario and choose the most appropriate answer. First, they have asked, in case of supply of souvenirs by Happy Gift House to ABC India Limited, what will be the place of supply and value of supply? That means we need to be careful while reading about Happy Gift House supplying to ABC India. Then they have asked us the place of supply for hotel accommodation service by Dream Hotels to ABC India LLP and the nature of supply, whether it is inter or intra. Fair enough. The net GST payable in cash by ABC India Limited for the month of July in the state of Maharashtra would be dash. That means we will have to do the computation of output minus ITC because they have asked us net GST payable. ABC India LLP wishes to keep its CGST liability at minimum. The moment they say they wish to keep CGST liability minimum, I with I, then I with C, because I with C and S can be utilized in any order, any proportion. So here, to keep minimum CGST liability, we will use I after I, we will use it against CGST. Then they have asked us, the finance team is also exploring the feasibility of getting ABC India LLP registered as a casual taxable person in the state of Rajasthan with effect from 20th June. In this scenario, the invoice to Trent Limited will be issued by ABC India LLP as a casual taxable person registered under Rajasthan. So they are also planning something else, we need to be careful. Moreover, the invoice by Dream Hotels and Happy Gift House will be issued to ABC as its GST registration number in Rajasthan. Okay, then all the transactions related to this transaction will be routed through GST registration in Rajasthan. Fair enough. So we need to estimate the tax liability for the month of June if they are in state of Rajasthan as a casual taxable person. Okay. And then compute outward GST payable on water purifiers gifted by Trent Limited to its employees for the month of August. Oh, giving gift to employees, that means institute is testing us on 50,000 limit, because a gift between employer and employee up to 50,000 would not be liable to GST. That's what they are testing on. Now, based on this, let's go and read the entire case study scenario. Now, Trent Limited, a supplier of water purifiers, is a company registered with the jurisdictional GST authorities at its principal place of business in Maharashtra. Fair enough. Trent Limited has approached ABC India, a Mumbai based event management company. Both are in Maharashtra, C plus S would be applicable. Okay. To undertake the following activities in relation to organization of an event to be held in July 21-22 in Udaipur, Rajasthan for its employees. Arrangement of accommodation services in hotel in Udaipur. Fair. Arrangement of souvenirs to be distributed to employees attending the event. So they are going to give something valuable, or I mean something memorable to the employees. So the event management company has to arrange two things: one, accommodation; second, souvenirs. Trent Limited has agreed to pay a fixed sum of 3 crores exclusive of GST. Rate of GST is 18% for the aforesaid services provided by ABC India. The amount of 50 lakh is paid to ABC as an advance at the time of entering the agreement on 25th June. Okay, the moment you enter into the contract, you are ready to give an advance. Time of supply for advance will be immediately, because it's a supply of service. For services, we use payment or invoice, whichever is earlier. Balance is payable on 21st July upon issuance of invoice by ABC LLP, and invoice was duly issued for full amount in the month of July. Fair enough. ABC India LLP has entered into an agreement with Dream Hotels, a hotel based in Udaipur, for the aforesaid event to be organized for employees of Trent Limited. Dream Hotels has agreed to provide services to ABC India, which includes accommodation and other ancillary services for the event for 1.5 crores. So hotel is going to provide the service to ABC LLP for 1.5 crores. Tax rate is 28%. The consideration is payable by ABC at the time of check-in of the guest on July 21st. Further, ABC India has also entered into an agreement with Happy Gift House, a well-known gift shop in Udaipur. Okay, so they are buying these goods from a person registered in Udaipur. It was agreed that the souvenirs would be purchased by ABC India LLP from Happy Gift House at a consideration of 20 lakh. Now, they are purchasing these for 20 lakhs. Be very careful. This is a supply of goods, and for these goods, the place of supply will be based on the address of the person in whose name the bill is being issued. So if goods bill is being issued in the name of ABC, then in that case ABC Maharashtra will be the recipient. Reason: section 10(1)(b). Section 10(1)(b) says if the goods are delivered to a third person at a location, then the person who has basically ordered the goods, his place of business would be considered as the place of supply. Now, hotel is in Rajasthan. Let's see where the goods are being delivered. But goods delivery will not matter in this case, because the place of supply will be based on where you are billing. To whom are you billing? You are going to bill it to the Maharashtra registration of ABC. So Rajasthan billing to Maharashtra, it would be a IGST transaction. Let's see further. The aforesaid amount includes cost of packing of souvenirs, that is 20,000, cost of delivering, that is 50,000. It's already included, nothing has to be done. At the event location, that is Dream Hotels Udaipur. See, though the goods are getting delivered in Udaipur, but the order was placed from the Mumbai GST registration of ABC. Hence, Happy Gift House would be charging IGST to ABC LLP. The entire consideration is payable by ABC India LLP to Happy Gift House at the time of delivering the souvenirs on July 21st. In the month of August, Trent Limited gifts its 150 employees a water purifier in terms of their employment contract. First class. If it is in terms of their employment contracts, anyways, let's see the valuation also. The total open market value of such water purifiers was 52.5 lakhs exclusive of tax. All water purifiers bear the same cost. Now, the moment it is in terms of employment contract, anyways GST would not apply, but let's see the valuation as well. Now 52.5 lakhs divided by 150 employees. How much does that come to? 52.5 lakh divided by 150. That comes to 35,000. Even if we go by this, still GST would not be applicable because gift up to 50,000 will enjoy an exemption. There is a relief which is available that it will not get covered under Schedule 1, supply without consideration to a related person. Fair enough. Trent Limited and ABC India Limited are not registered in the state of Rajasthan. Fair. There is no other taxable supply, taxable procurement apart from Deem Hotels and Happy Gift House as mentioned above in the month of July. Opening balance of ITC of both Trent Limited and ABC for the relevant period is nil. All the amounts are exclusive of tax. We have read the entire case study. Now let's see what would be the answer. First is what would be the supply of service, supply of goods, souvenirs, Happy Gift House supplying those souvenirs to ABC. See, the place of supply will be Maharashtra and the value will be 20 lakhs. Reason, sir? 20 lakhs is what is being charged, and 20 lakh is including this cost of delivering the same and cost of packing. That will anyways form part of value. There we don't have any kind of issue. Okay. Then place of supply of hotel accommodation. This should be easy. Hotel accommodation. Hotel is in Rajasthan. Place of supply for hotel would be Rajasthan. That means it would be Rajasthan. Let's see whether it is inter or intra. It would be a intra-state supply because the supplier is in Rajasthan, the place of supply is in Rajasthan. It would be an intra-state supply where C plus S would be applicable. Then net GST payable by ABC India for the month of July in the state of Maharashtra. Now people, see, 50 lakh advance was received in the month of June. Correct? 2.5 crore will be received in the month of July. Total money charged is 3 crore. 50 lakh as advance, 2.5 crore in the month of July. They have asked us to calculate the liability for July. Now 2.5 crores into 9% comes to CGST 22.5 lakh, SGST 22.5 lakh. Because see, ABC is in Mumbai. When this is a case of section 12 where event is being organized, organization of an event, place of supply will be location of the registered person because you are providing it to a registered person. As you are providing it to a registered person, location of supplier is Maharashtra, place of supply will also be Maharashtra because the event is organized, and organization related services if provided to a registered person, then the place of supply will be location of the registered person. So C plus S will be charged. Now what ITC will you be eligible for? You will be eligible only for ITC of 20 lakh into 18%, which is on souvenirs. Because hotel ITC you will not be eligible. C plus S of Rajasthan you cannot claim it. So 1.5 crore here. This 1.5 crore into 28%, that is 14 and 14 will become your cost because that tax will get buried in Rajasthan. But for souvenirs 20 lakh charge, this will be eligible for ITC and they will be charging IGST. Reason, sir? For souvenirs they will be charging IGST. They are in Rajasthan, place of supply is in Maharashtra, IGST would be applicable. So 20 lakh into 18%, 3,60,000 will be your input. Now I am using that input completely against CGST. Reason? The question is saying that you have to keep CGST liability minimum. And if I were to keep CGST liability minimum, I will have to utilize I with C first. This will come to 18.9 lakhs and 22.5 lakhs. So the winning answer will be 18.9 lakh, 22.5 lakh. IGST nil. Clear? Be very careful. We have calculated only on this 2.5 crore because 50 lakh was of June and they have asked for July. This is where institute can play. Be very careful on this. Okay. Now, let's see the fourth one. Interesting. The finance team of ABC LLP is considering registration in Rajasthan as a casual taxable person with effect from 20th June. So, they'll do all the billing from Rajasthan. In such a scenario, invoice to Trent Limited will be issued by ABC Limited LLP as a casual taxable person registered in Rajasthan. Okay. Moreover, the invoice of Dream Hotel and Gift House will also be issued to ABC LLP at its GST registration number as a casual taxable person in Rajasthan. Estimated tax liability of ABC LLP for the month of June to be paid in advance at the time of submission of application. People, do you know that casual taxable person has to discharge its tax liability on estimate basis? While they are taking registration, they have to deposit the tax. Now here we have to only estimate the tax and what you should pay. See, for estimation, our contract value is 3 crore. Just imagine, 3 crore ABC LLP Rajasthan is billing to Maharashtra registration. CSI, IGST will apply because ABC is billing to Maharashtra registration of Trent Limited. So 3 crore into 18%, that is 54 lakh. Now this 54 lakh will be my IGST liability. Correct. Okay. I will be eligible for ITC of, see, hotel is going to charge me 1.5 crore. Now 1.5 crore, that would be C and S, correct? 28%. This will be C and S. But can I use C and S against I? The answer is yes, I can use C and S against I. So I am doing a rough calculation. 1.5 crore into 28%, which comes to 42 lakh. C plus S eligible. Then that souvenir is for 20 lakh into 18%, which comes to 3 lakh 60,000. This will also be C plus S because both the parties are going to bill me in my Rajasthan registration. So location of supplier Rajasthan, place of supply Rajasthan. Both hotel and souvenir guy will charge me C plus S. Now if I do this computation, 54 minus 42, 12 minus 3, 9, 8.4 lakh IGST. This would be my tax which I should pay as a casual taxable person, being my estimated tax liability. IGST 8.4 lakh, which will be option B. Clear with this? Yes. Now this scenario is very simple. It's just that you need to apply complete sense in this. Now, then it says compute the outward GST payable if any. Wonderful. On the water purifiers which are gifted by Trent Limited to its employees for the month of August. Now, the liability here will be nil, nil, nil. Obviously, no tax would be applicable in this case. Yes? Okay. Now let's see the next MCQ. These are smaller MCQs. Let's see it carefully. Nivedita Foundation, a charitable trust registered under section 12AB of Income Tax Act 1961, owns and manages a newly constructed Dharamshala, Govindam, in the precincts of a temple. Wonderful. You remember precincts of a temple, there's an exemption available. 999 hotel room, 9999 shop, 9999 for a hall. This question is based on that. Govindam has 50 rooms, a huge party lawn and other amenities. Nivedita Foundation has received the following receipts during the month of April. Rent 25 lakh from renting of rooms 1000 per day. This will be taxable. Entire 25 lakh will be taxable because the exemption is when it does not exceed 999. The moment it is 1000 or more, it would be taxable. Then rent of 9 lakh from renting of party lawns for marriage and social function, 9000 per day, exempt, because up to 9999 it would enjoy a relief. Donation of 20 lakh including one donation of 15 lakh received from specific direction to advertise the business activity of the donor, 15 lakh will be taxable, because this is actually not a donation, it's actually an advertisement amount. So 25 lakh will be taxable, 15 lakh will be taxable. Determine value of taxable supply. The winning answer would be 40 lakh. Clear? Simple. Okay, let's see the next one. Which of the following statements is or are not correct for similar goods for valuation purposes? Similar goods, people, basically they are testing you on custom duty valuation rules. Import of goods has a specific point, identical goods, similar goods, rule 5. Let's see. Similar goods, although not alike, we have to test which is not correct. Although not alike in all respects, have like characteristic, like component material, which enable them to perform same function and to be commercially interchangeable with the goods being valued, having regard to the quality, reputation and existence of trademark. I mean, this is completely correct. This is what is similar goods. In fact, this is the definition of similar goods. Similar goods must necessarily be produced in the country in which these goods are being produced. Now, that country is necessary. Yes, that country is necessary. Similar goods must always be produced by the same person. No, people, country is important because factors of various economic factors for a country will remain same. Economic factors remaining same, that country objective has to be met, but it could be same person or a different manufacturer in the same country. So third one is wrong. The answer will be third. So be very careful about not correct. They test you on this in the exam pressure. Now let's see this. Which of the following supplies, items or categories are ineligible for the scheme of remission of duties and taxes for export product? So you have to find out what is ineligible. Export of imported goods in same or substantially form, yes, ineligible. Same form, not allowed. RODTAP is not allowed, only for manufactured products. Export which are subject to minimum export price, again ineligible, because if government is levying minimum export price, that means government does not want you to export. Products which are restricted or prohibited under foreign trade policy, obviously something which is restricted or prohibited will get ineligible. Goods which have been taken into use after manufacture, again ineligible. Say suppose you import a machine and then you use it. Then now you want to send it back outside India. Will you get RODTEP benefit? The answer is no. So all the four are ineligible and the winning answer will be D. Okay. Now till here you have not found any error in the or a difference of opinion. But now let's see what happens further. Now, Motor Power Private Limited, registered under GST. First, let's see, whenever it's a lengthy question, let's see what we have to determine. That will give us a fair idea of what we should do. Compute total ITC available. So first task will be total ITC available with Moto Power Private Limited given tax period and net GST payable, ICS as the case may be. That means ICS has to be done separately from e-cash ledger of Moto Power Private Limited. CGST, SGST, IGST rate on all inward and outward supply is 9918. Except for renting of cars, CSI rates 2.5, 2.55%. Fair enough. It is important to note that credit of input tax charged on goods or services used for supplying transportation of passengers by any motor vehicle designed to carry passengers where cost of fuel is included in the consideration charged from service recipient is not available. So anything related to outward supply of transportation of passengers not eligible for ITC, except the credit of input services of same line of business. Okay, same line of business will be eligible, otherwise not eligible. This point comes from a rate notification of renting of motor vehicle. As you know, rate notifications are not applicable for your exams, so they will have to give this statement in the question. The necessary conditions for availing ITC have been complied by Moto Power. You are required to make suitable assumption wherever necessary. Let's see. So two targets, outward tax and ITC. Let's see. Moto Power Private Limited, registered under GST, is engaged in manufacture of 5-seater luxury cars. The cars are manufactured in its factory located in state of Rajasthan, Uttar Pradesh and Gujarat, 3 states. It also enters into contract providing these cars on rent to corporate clients where cost of fuel is included in the value. Fair. The company reports the following details for its factory located in Gujarat. Okay, that means you have data only of Gujarat. You'll have to compute for Gujarat. Sales, car rental, income from services provided to Gujarat government administration. Then raw material, rent paid, consumables, security service, general insurance, works contract, audit fee, bank charges, membership of automobile association, all this is given. Let's see the data. All the amounts are exclusive of tax, okay, wherever applicable. However, applicable taxes have also been paid by the company. Further, following additional details are furnished by the company in respect of the payments and receipts. Raw material worth 50 lakh, 0.5 lakh purchased from registered supplier located in Gujarat were destroyed due to fire and thus could not be used in the manufacturing process. Remaining raw materials were procured from various vendors in Maharashtra. People, Maharashtra to Gujarat, IGST will be applicable. Now, out of 4.5 lakh, you will be eligible on 4 lakh ITC available. Correct. On 4 lakh, you will be eligible for ITC. Okay. Then, rent paid for the factory building located in Rajasthan to its owner registered in Rajasthan. Now, factory building located in Rajasthan, you are computing for Gujarat. So, this rent paid, will it be eligible? The answer is no, no ITC. Now, in institute's answer, ITC on this. Now, this rent paid would be CGST, SGST of Rajasthan, which would not be eligible for ITC for the Maharashtra GST registration. Sorry, for the Gujarat GST registration, this C plus S charged by owner in Rajasthan will not be eligible. Now, that's one of the points where there is a discrepancy between the law and the answer given by ICAI. To this extent, be very careful. ITC would not be eligible. In exams, you will take this position that rent paid in Rajasthan would not be eligible for ITC for Gujarat registration. Okay. Payment for security services for the period has been made to Safe and Secure Solutions Private Limited, a company located in Gujarat and not registered under GST. So there is no question of ITC because the supplier is not registered. Sir, will we pay under RCM? The answer is no RCM. Why, sir? Because the service is being provided by a body corporate, and you remember security services other than body corporate is only covered by reverse charge mechanism. Be careful on this. No ITC, no RCM. If you do something for this, you'll lose marks. General insurance service have been availed from Dividend India Company Limited registered in Gujarat. This will be eligible for ITC and C+S. Now works contract service have been used by the company for construction of foundation on which machinery is to be used and it is permanently mounted. ITC is eligible. Now here I have one issue. See, works contract service is taken, but they have not mentioned from which state. So we'll have to assume something. You can assume C+S or IGST as the case may be, because they have not said works contract service is taken from a person who is registered in Rajasthan or Gujarat or Maharashtra. They have not mentioned. We will assume it to be C+S, saying that it has been taken from a guy in Gujarat and it will be eligible, so C+S. Audit fee is paid to Pandya and Associates registered in West Bengal with an aggregate turnover of 30 crore in last year for conducting the statutory audit of the company in the preceding financial year. The firm raises a e-invoice without IRN. Congratulations. Without IRN they have issued a e-invoice. You will not be eligible for ITC because a person who is required to generate an e-invoice, if he does not generate an e-invoice, that is just paper. That's not a document at all, which is eligible for ITC. That's just paper, and based on paper, you cannot take ITC. So this will not be eligible. For your exams, the limit for e-invoice is 20 crores, which is already covered in the amendment video uploaded on Chikesha Classes YouTube channel. Bank charges are towards various services availed by the company during the month with regard to its current account maintained with Money Bank registered in Gujarat. The bank issued a consolidated tax invoice for all such services at the end of the month containing details of tax charge, description, total value, GST-IN. Fair enough, ITC will be eligible. Obviously yes, because banks have an option. They can issue one monthly invoice per customer per month. Now breakup of sales in Gujarat, C+S, sales other than Gujarat, IGST, export under LUT, no GST. Car rental income pertains to renting of cars to James Travels Limited registered in Gujarat. Cost of fuel is included. Okay, so you will be charging C+S. Further, consumables procured from registered suppliers located in Gujarat include diesel, excise duty and VAT paid worth 0.75 lakh. So 0.75 lakh will not be eligible. Out of this consumables, 0.75 lakh will not be eligible because that's for diesel. Okay, balance would be eligible for ITC. Service provided to Gujarat government administration under health training program where 51% of the total expenditure is borne by Rajasthan government. Will it enjoy an exemption? No, you'll again be charging C+S on this. And then they have given you opening balance of CSI, which you will use in ITC. Now, the entire working of this is available here. Just one difference with ICI solution, is this part, ITC on rent. Otherwise, consumables, yes, you will be eligible. Security services, no ITC. General insurance eligible, works contract eligible, audit fee not eligible, bank charges eligible, membership of association, automobile association eligible. You have opening balance. This is the ITC computation. This is the output computation. For export, no, and all others are liable. Only one difference, that is that rental ITC of Rajasthan. Clear? Simple question. Just be smart on certain specific areas. Okay, let's see the next one. Next one is again an area where I have a difference of opinion on this. Let me first take you through it. Adinath Private Limited, registered under GST in the state of Uttar Pradesh, instructed Ashok Transporters to deliver certain goods to Mahavir Enterprises in Maharashtra on 10th Jan 22. The value of goods is 6,80,000, which is chargeable to 18% IGST. Fine. When the goods were in transit, proper officer intercepted the goods and the truck in which the goods were being transported under section 68. However, the driver of the truck failed to tender any document in relation of the goods. Wonderful. He does not have any document. The proper officer, after conducting a physical verification of the goods and the truck, decided to seize the goods and the truck and issued a notice under 129(3) specifying the penalty payable by Adinath Private Limited after giving them an opportunity to be heard. You are required to determine the amount of penalty payable if Adinath Private Limited does not come forward. This is an amendment provision. The penalty which is applicable is 200% of the tax or 50% of the value. Now, this is under CGST law. The moment it says 50% of the value, you will have to take 50% of value in CGST, 50% of value in SGST, and IGST it would be 100% of the value. People, whenever it's a percentage of tax, you don't have to double it for IGST because tax automatically gets doubled. But whenever it is a percentage of anything else or it's an amount, you will have to double it for IGST. Here 50% of value CGST, you will have to double it 100% of value. Institute has taken a position that it would be 50% of value for IGST also. Personally, I don't agree to that. I think there should be a revision, but say suppose an examination question comes, I would recommend you to write what I am showing you, plus you also mention that 50% of the value being considered, that would be the answer. It's better not to take a risk and write both the things, because in my view this is the law. The law is very clear on one particular aspect. The law is very particular in one particular aspect. Whenever you see such cases, you need to be very careful in the examination hall. Difference of opinion given by institute, you better write both the provision. 50% of the value, you will double it for IGST. 200% of tax, you will not double it because tax already gets doubled. Now, they have asked us to calculate the penalty and also the penalty on Ashok Transporters if he intends to get the truck released. People, there have been amendment in this and you need to be very careful on this aspect. Ashok Transporters, penalty payable under 129(3) or 1 lakh. Again, 1 lakh is for CGST. It will get doubled for IGST. But Institute's answer has taken 1 lakh. Again, I would suggest you to write both the things. As it is a IGST question, it has to be doubled. 1 lakh would become 2 lakh. Let me show you the answer. 200% of the tax or 100% of the value. See, 50% of value for CGST, 50% of value for SGST, it has to be 100% of the value, because it's a IGST question. Total would be IGST 100% of the value. So the computation will be 244 or 680, whichever is higher. 680 will be higher. Now for transporter, what will it be for transporter? For transporter, it would be the above penalty or 2 lakh, whichever is lower, that is 2 lakh rupees. Now institute here has taken 1 lakh. 1 lakh is given in the law, I agree, but 1 lakh is for CGST law, 1 lakh for SGST law. The moment it's IGST, it would be 2 lakh. Clear with this? Yes. So you better write both the answers in my view. Yes? Okay. Great. Next one is a very good question. I mean, they have given a wonderful question which tests you on exempt supply and what is the meaning of E. If you recall, for ITC chapter, we compute E by F to find out how much of ITC relatable to common credit is eligible to us. That E is much wider compared to exempt supply, because E represents exempt supply plus supply on which tax is payable under RCM, and it excludes 3 things. Interest on loans, deposits, advances is excluded. Then you have a specific exclusion for a particular case which is relatable to vessels, and then you also consider other than negative list, but land and building will form part of value. That's what we had learnt in E. It would be a complete revision of E while reading this. Beautiful question. Super Liver Limited is engaged in manufacturing of taxable electronic goods. Its 2 manufacturing units are located in Mumbai and Nagpur. Both the units are registered under GST in the state of Maharashtra, single registration. The company has another manufacturing unit in Bangalore, registered under GST in the state of Karnataka. Okay. And a retail showroom located in Ahmedabad, registered under GST in the state of Gujarat. So totally 3 registrations: Maharashtra, Karnataka and Gujarat. The company has provided the following details for activities or transactions. Lot of things are given. Let me first read what they require. With the help of above information, you are required to determine the value of exempt supply provided by Nagpur and Mumbai unit. You need to calculate exempt supply. Will your answer be different if the value of exempt supply provided by Nagpur and Mumbai unit is to be determined for the purpose of apportionment of ITC under 17.3? Apportionment of ITC, that means they are targeting E. Let's now see. Now, people, taxable supplies, does that get included in E or exempt supply? No, obviously no. So this will not form part of E. Interest on fixed deposits. People, interest on fixed deposit, it is a exempt supply, but it is not E because it is specifically excluded. Okay. Sale of securities. Now people, sale of securities is not an exempt supply. Is it, sir? Yeah, obviously. Sale of securities is not an exempt supply. But now sale of securities is not an exempt supply. But for the purpose of E, we consider 1%. Okay. Sale of agricultural land in vicinity of a manufacturing plant. Stamp duty paid 1 crore. Stamp duty paid on 1.85 crore. Now, it is not an exempt supply. It is not an exempt supply because negative list is not an exempt supply. But Will it form part of E? The answer is yes. For the computation of E, yes, that is part of E. Sale of old factory building which was not used anymore. Again, it's a sale of immobile property. 75 lakh will be considered because the value on which you have paid stamp duty, that is the value which is considered for E computation. It's not an exempt supply, but it is E. Transfer of actionable claim other than betting, gambling, lottery. Again a negative list entry. This will neither form part of E nor it is a exempt supply. So for E it would be 2 crore 60 lakh 4,500 and exempt supply value will be 1 lakh 8,000. Good question to differentiate between what is exempt and what is E. Remember, negative list is not a supply at all. So how can it be an exempt supply? But it is considered for the purpose of computation of E. Land and building is considered stamp duty value. Other negative list entries are not considered for E. So what is E, sir? E means exempt supply plus supply on which recipient is paying the tax, excludes interest other than interest earned by banks and financial institution, one vessel transaction, transportation of goods in a vessel, and the last one is related to negative list other than land and building. Land and building will form part. Okay. Now, in the above question, again they are saying in the above question, all other things remaining same, compute the value of supply most beneficial made by Bangalore unit as well as value of supply most beneficial made by Ahmedabad retail showroom if Super Liver Limited furnishes the following additional information for October. Basically, this is a question on valuation rules. Rule 27, 28, 29, that's where they are testing us. Bangalore unit has appointed Equilibrium Sales as a sole selling agent. The moment you see sole selling agent, it's a related person transaction. They are talking about Rule 28. MS Equilibrium Sales sells the electronic goods of Bangalore unit under the invoice issued in its own name. The Bangalore unit transfers the goods at 7:25 to Equilibrium on 20th October, which were sold by Equilibrium Sales on 31st October at 7,65,000. On 20th October, another electronic manufacturer supplied the goods of like kind and quality to Equilibrium Sales as the one supplied by Bangalore unit at 775. So 775 is the price of like kind and quality goods. Now the question, now whether you can take this 725 which is the transfer price at which Bangalore unit is giving it to the related person. For that, one last statement is important. Note, Equilibrium Sales, Paridhi Sales, Dhara Enterprises are not eligible for full ITC. Further, open market value is not available. So they have clearly said you cannot use open market value, and the other person is not eligible for full ITC. If the other person was eligible for full ITC, then the invoice value which you have mentioned, you could have taken it as deemed open market value. So in this question, 725 is out of picture, can't be used. 775 like kind and quality, this can be used. And you can also use 90% of the sale price of your related person to unrelated customers. If you see here 775 versus 90%, 90% is a better option, and hence we will choose 688,500 as the value. Okay. Second case, the retail showroom at Ahmedabad transfers goods costing 85,000 to its agent Paridhi Sales on 12th October. Paridhi Sales sells such goods on 18th October for 5 lakh under the invoice issued in the name of retail showroom at Ahmedabad. On 17th October, Paridhi Sales has sold goods of like kind and quality as one supplied by retail showroom at Ahmedabad to unrelated customer at 470. Careful people, this is not a supply at all. Retail showroom Ahmedabad is billing in his name, principal billing in his name. There would not be a supply between principal and Paridhi Sales. Yes, obviously principal supplying to end customer will be liable, but there is no supply between the agents. So between the agents, no supply. I agree with this answer, though they could have given it in a better form, but what they are targeting, what institute is targeting is whether you know that when principal is billing in his own name, there is no supply between principal and agent. This will be much clearer from the next one, where agent is billing in his name. If agent is billing in his name, you will use rule 29. Let's see. Retail showroom at Ahmedabad also transfers goods costing 225 to its agent Dhara Enterprises on 15th October. Dhara Enterprises sells such goods on 20th October for 1 lakh under an invoice issued in its own name. Here agent is billing in his own name. On 19th October, Paridhi Sales. I mean, this is just a typo error. This will be Dhara. You can just change it in your RTP also. This will be Dhara. It's just that while copy pasting, such errors happen by anyone and everyone. So this will be Dhara has sold goods of like kind and quality as one of being supplied by the retail showroom to unrelated customer at 98,000. Now, in such cases, you can use open market value or 90% of the price at which like kind and quality goods are sold. Now, at this particular juncture, remember Dhara is selling such goods for 1 lakh and like kind they are selling it for 98. So I can use 98 into 90%, which will be my most beneficial option. So the pricing between principal and agent would be 98,000 into 90%, 88,200. And agent is further supplying it at 98,000. And such goods he is supplying for 1 lakh, he would have already charged GST on that. We are valuing between the retail showroom in Ahmedabad and Dhara Enterprises. For here, he has further sold it for 98,000 like kind. So this into 90% would be the value for this transaction. Clear? Okay, read this once again. Okay, now basically some theory questions or case study based questions. Sanmati Industries, registered in the state of Maharashtra, receives a machine for repair in its workshop located in Maharashtra from Mitsubishi Limited, an automobile manufacturing company based in Japan. The repair work was carried out by Sanmati Consultant, for which it has paid in convertible foreign currency. While raising the invoice for the said consideration, the accountant of Sanmati Consultant approaches you as to whether dynamic QR code is mandatory for the required invoice. You are required to advise him. Mitsubishi Limited is not registered in India. Further, aggregate turnover of Sanmati Consultant was 550 crores in preceding financial year. First of all, last year 550 crores. You are liable to generate dynamic QR code based invoices. Now, see, you are repairing a machine. Now, one thing is that they have not mentioned whether after repair it has been put to use in India or it is directly sent outside. But in both the cases, one thing is very clear. They wanted to ask about not being an export, receiving foreign currency. They wanted to target one area. place of supply for this, say suppose it is India, assuming that it was put to use in India, because if a particular product gets repaired in India and thereafter it is exported, place of supply will be outside India. But if it was put to use in India, then the place of supply will be India, correct? If it is put to use in India, place of supply will be India. If it is just coming from a repair and going outside India, place of supply will be outside India. In both the cases, dynamic QR code is not required. In my view, you should write both the things in exam. 1. If it is put to use in India, place of supply is in India, it is not an export transaction, but as you are receiving foreign currency, no need for dynamic QR code. And do you expect the person outside India to pay through dynamic QR code? He has to pay through channels which are said and declared by RBI. So obviously, if it is not an export, then in that case, still no requirement of dynamic QR code. Reason, foreign exchange received, recipient is outside India. If it is an export, then again it would not be required. You should write this answer also, that if it is an export, then in that case, where is the consumption? Outside India. And export transactions, they are already covered by B2B e-invoicing. They will not be required to go for dynamic QR code based on the circular issued by CBIC. These are the 2 point of views. In exams, I expect institute would be much clearer as to whether it is put to use in India or not. Okay, that's difference of opinion. That's it. Whenever you get a difference of opinion, you better write both. Sir, both you keep mentioning. Have you ever done that? Let me tell you, I secured rank 6 in my CA final exams in May 2013. In my direct tax paper, I remember there were 2 questions where I was getting 2 different views in my mind. And what I did is I wrote both the views and I scored 88 in direct taxes in my CA final exams. That means I'm sure that I got marks for those views which I presented. Because the question was unclear, I wrote both the views. So I have done it, and that's why I am recommending it to you. It's not that I'm just recommending it to you. Okay, let's see the next one. Briefly answer the following questions with reference to the provisions of rectification of mistake or error apparent from the face of the record. Pure theory question. Which documents are covered? Any decision, order, notice, certificate. Who can rectify it? Any authority who has passed it. What types of mistakes? Mistakes which are apparent from record. What is the time limit for rectification? 6 months is the time limit. For application, 3 months. For rectification, 6 months. But if it's a clerical error, then in that case, there is no time limit. Rectification can be done at any point of time. Okay. Again, a very good question. Difference between zero rated supply and exempt supply. Never has such theory question been asked, but institute has mentioned in RTP zero rated supply and exempt supply difference. See, they have covered 5 basic categories. Let me tell you. First one is meaning of zero rated supply. Basically, export of goods and supply to SEZ unit or developer. Exempt supply, nil, wholly exempt and non-taxable supply. I have already covered what is included, which is part of the meaning. So these 2 are 1. ITC, zero rated supply, eligible. Exempt supply, not eligible. Tax treatment, zero rated supply can be with payment of GST, without payment of GST. Exempt supply, no tax. Registration requirements, zero rated supply is an export interstate supply. You have to mandatorily take registration. But for exempt supply, if you are wholly providing exempt supply, no need to register. Invoice versus bill of supply. For zero rated supply, you will be issuing a invoice, while for exempt supply, you will issue a bill of supply. These are the areas which institute has targeted in the answer. So you can just make a note of this. Okay. Joe Biden. No, it's John Biden. John Biden, age 32. Wonderful. A tourist of US origin He has come to India on a travel visa and carries with him the following articles as part of his baggage. So basically a baggage related question. Let's see. Use personal effect, no custom duty. Travel souvenirs, no custom duty. Laptop, one laptop is allowed, no custom duty to a person aged more than 18 years. No custom duty. 200 grams of tobacco. Careful, people. Tobacco, 125 grams is allowed. 125 grams is allowed. A balance 75 grams will not get the baggage rate benefit. They are subject to 100%, but that 100% computation is not there in our syllabus because that comes from a rate notification. So only a note is mentioned that more than this quantity of tobacco, firearm, cartridges, cigarette, cigar, if it is more than the specified quantities, then it would be not eligible for baggage rate, subject to 100% custom duty. Then 50 cigars, 25 are eligible, so I'll be taking 25. Firearm not eligible, people, subject to full rate. 80 cartridges, 50 will be eligible, so here 50, here 25, here 125 grams. Then 1.5 liter wine, that's fine, allowed. Mobile phone, yes, it will suffer the baggage rate, and as he is a US tourist of foreign origin, he will get a general free allowance of 15,000, 98,125 subject to 38.5%, with a note saying that firearm, cartridge, cigar, tobacco in excess of the specified quantity will be subject to higher custom duty rate of 100%. You don't have to show the computation, rate notification is not there. Okay, great. Then you have a question with regard to customs import of goods at concessional rate. See, there have been some amendments in this. Now, import of goods at concessional duty rate. See, I'll give you an example. Say suppose government wants to encourage manufacture of calculators, and they give a benefit saying that if you are importing various raw materials of calculators, whatever raw material is used, you import it for use of calculator, you will get a concessional rate. These are called as end use based exemption notifications, where you are getting an exemption of raw material of this calculator if you are using it to manufacture calculator. So you need to maintain records and submit various data. Now the question is, when I import these raw materials, can I send it to the job worker? The answer is yes, obviously I can send it to the job worker. We need to submit a monthly statement, and maximum time for which we can let it be with the job worker is 6 months. And whenever you are sending, follow the requirements of e-way bill and maintain records. That's the basic part. This, you just have a look at the question and also have a look at the answer. Yes? Okay, so basically you will be targeting these areas, that monthly statement should be there and submitted, maximum 6 months, e-way bills and records to be maintained, plus job worker will maintain records at his end. Coming to the last question of RTP, again there has been an error, a very small error, but there is an error, plus one difference of opinion. So important because one error, one difference of opinion. Let's see. A warehousing based question. Niryat exporters imported some goods on 1st January. The goods were not meant for being used in 100% EOU, STP or EHTP, because if they import, there is no custom duty at all. The goods were cleared from Mumbai port for warehousing on 8th January, presenting into bond bill of entry. The assessable value was $10,000. Fine. 8th January, the exchange rate was 66 rupees. Be very careful. Rate of exchange will be the rate of exchange as on filing first bill of entry. And in this case, the first bill of entry which you have filed is into bond bill of entry on 8th Jan. So you'll be using 66. Okay. And the basic custom duty rate was 15%. This will not be relevant except for into bond amount calculation, thrice the duty amount. Remember? The order permitting deposit of goods in warehouse for 4 months was issued under section 60 on 15 January. The goods were thereafter deposited to warehouse in Pune and were cleared from Pune warehouse on 31st May. Now you have cleared after 4 months. That means warehousing period has expired. And if warehousing period expires, that would be the deemed date of removal. That day's rate of duty will be applicable. Yes, Keshav Rayan famous judgment, that date will be applicable. The rate of basic custom duty was 12% and rate of exchange was 68.75 on 31st May. That will not be useful. This is irrelevant for us. IGST was 10% on the said goods. Further, rate of basic custom duty was 12% and exchange rate was 67 on 15th May. People, 15th May will be the deemed date of removal because your period of warehousing 4 months expires here. This is the deemed date of removal, and that day's rate of duty will be considered, which is 12% basic custom duty. IGST at 12% is applicable on the said goods. Ignore agriculture and infrastructure development cess. That you don't have to consider for your exam. Compute total custom duty payable and interest if any. People, interest free period of 90 days is allowed. After that, interest will start. Now, total custom duty payable. In my view, total custom duty payable would include custom duty along with IGST. Now, they have not mentioned social welfare surcharge, but you will assume SWS at 10%. So, custom duty, SWS, IGST all taken 3 together would be total custom duty payable in my view. But institute has taken a view that total custom duty would not include IGST. What I will suggest you is, you calculate the custom duty. Next line you calculate IGST. Then you write total custom duty including IGST, which institute has used in ICI material also. Total custom duty including IGST. So you have given custom duty, next line IGST, next line total custom duty including IGST. And there is one error in this question. This is a difference of opinion. There is one error in the number of days computation. See, you got an order on 15th Jan and you cleared the goods on 31st May. 90 days interest free period is allowed. 15 Jan to 31st May. In such cases, the simple trick to do it is calculate the total days, subtract 90 days. 15 Jan, so January total 31 days. 31 minus 15 comes to 16. Feb 28 days. March 31. March 31. Then you have April 28 and May 31. You total this up, subtract 90 days, you will get the days. 16 plus 28 plus 31 plus 28. Here 30 would come. Plus 31. That comes to 136. 136 minus 90 comes to 46 days. So interest should apply on 46 days. Yeah, there can be a difference of opinion as to whether interest will apply only on custom duty or custom duty including IGST. That's a difference of opinion. Institute has taken a stand that when they say custom duty, it would mean only custom duty excluding IGST. But I would suggest you to do both the calculations for your examination. So here assessable value will be 6,60,000. I have taken 66 rupees as the exchange rate. Basic custom duty, social welfare surcharge, this is institute's answer. What I would recommend you is to calculate IGST and give custom duty including IGST. That will be 87,120 plus 89,654. which comes to 176,774. Again, interest calculation, you can show two things. You can show a computation of entire thing, or you can show it on only custom duty part. See this, 87,120T. ICI has taken 45 days, we will be taking 46 days. That's a error which has happened. Clear with this? Now, whenever you are computing days, you can go by total, or you can first compute 90 days and then for the balance period charge interest. Whichever way you are comfortable with. But again, I am telling you, 46 days is a correct answer, 45 days is a error. 87,120 versus 176,774 is a difference of opinion. Where there is a error, you will do a correct calculation. Where there is a difference of opinion, I recommend you to write both the things. Clear with this? Yes. Go through the entire RTP again. Wishing you all the best for your examination.